Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio, joining us to help us break down Bed Bath & Beyond. Now, this stock's getting hammered, Landon. It seems like, I don't know, they've got everything you need, like, for a home, but it seems like nobody's going there. They do a lot of promotional stuff. But is this execution failure by the management team? What kind of data are you guys seeing? Because it seems like the consumer's still doing okay, but maybe they're pivoting away from this stock. I'm not sure, but this has just been a miserable slide over the last 12 months.
Yeah, I agree. I'd also say that they've got everything you don't need at that store. I mean, it's tough to walk around the circle of that store. They definitely have a lot to choose from, but every time I've gone, I've not been impressed. But you also have to remember when you're talking about the stock price, I think it's better to compare, kind of pre-COVID, because I think the stock was around $10 then, and now it's $6.50 or so. And even though it got up to near $40, that was more of a part of that meme stock, short squeeze, the GameStop, AMC, all that. The Bed Bath & Beyond kind of got thrown in the mix there because they had a high short interest. So I don't think the company was ever actually valued at 39 over the last, year or two. Now you go back 10 years, then you're talking about getting hammered because this stock has been almost 10 times what it is today. So this is definitely going in the wrong direction for long-term investors, and I think it has a lot to do with just execution and just how much people actually like this store. You can see people just talking about the company in general. That's that blue line. It was kind of steady even through the pandemic, but then it really has just fallen off, and it's kind of maintaining a lower level now. The stock, as you mentioned, has been hammered, especially when you think about as high as it got. I guess it did get up over 50 there with the meme stock one day, so pretty wild times. But basically what we're seeing is just consumers not loving this brand, not loving this product. When you look at some of the tailwinds that they've got, when you talk about home renovation kind of being, it's been on the increase. Even home sales have definitely been on the increase. Anytime you do either one of those things, you're looking at going to a store like Bed Bath & Beyond and kind of, redoing your bed, your bath, maybe your kitchen, other areas. Home renovation had a huge spike during COVID, during the lockdowns, which makes sense. A little bit, tail off since then, but it's still doing fairly well. Right now, as a side note, all of the home renovation mentions are mostly around either the home office or the backyard, the bed, the bath, and the kitchen, which is, Bed Bath & Beyond. Those are very, very flat, so they're not getting a huge tailwind from that. But buying a new home is still up significantly, despite the slowdown, but they're not really seeing a lot of new business coming in. So I think that one of the probably the biggest tailwinds that they're getting is new weddings, as people really couldn't marry over the last year and a half or so, and that's starting to open up. So a lot of 1-year engagements turned into 2.5-year engagements, and now they're finally getting married because of the lockdown. But again, you're just not seeing a huge uptick. Even when we look at the omni-channel mentions here, down 23% year over year, you can see they had a great time. They executed really well. A lot of people were very happy with using them during the lockdown, ordering on their website, picking up at the store, that kind of thing. But now it's reverted back to levels under pre-pandemic. So they're losing customers where some of their competition, Target and Walmart, are gaining customers. So this is not a question of whether or not they have the right macro conditions to get a growth. What we're seeing is that they're just not doing it. They're not executing. Whereas Walmart and Target, Walmart much better, executing much better, and Bed Bath & Beyond's losing customers here. As you can see, purchase intent down 17% year over year. So I'm concerned with this company. I don't think that they have a strong, loyal customer base. I just don't see that. Not in the data. The happiness is it's on par with Target's, higher than Walmart, but that's not saying a lot. And they've had a lot of troubles with execution. They've had all kinds of out of stock issues where consumers couldn't get what they wanted, and so they go somewhere else. And once you do that to somebody once or twice, you're going to stop going to that store. So if you can't get it there, you find where you can, go to Walmart or Target, whatever it may be, and that's your new store. So I think that they've got a lot of work to do. They're losing money. The stock's been getting killed. But silver lining is expectations are extremely low. No one expects this company to do well. That's why it's at $6.50. And so I think over time, you could see maybe they do better than terrible, which is what I think everyone's expecting. So maybe there could be a little bit of relief if they show some kind of execution. I don't see it happening in this particular quarter. They report tomorrow morning. I don't see it happening yet. But if they ever do, you could get a little pop just because expectations are so low. So everything that I'm saying so pessimistic about this company is not, this is not insider information. Everyone kind of knows that Bed Bath & Beyond is struggling. But I'm just confirming that with our data. So bad news if you're a long-term investor. I don't think this is the quarter for the relief.
I'm writing that down, Landon. I'm better than terrible. I think those are words to live by. Inspiring words from Landon Swan. I'm better than terrible. There. Take that. Landon, this company peaked out, I feel, in 2003 when the movie Old School came out, right? That was their best run when they got mentioned in the movie Old School. And since then, they've struggled. And Landon, we bring this name up a lot, or we bring this term up a lot. And isn't this just a long goodbye? Isn't this just moving on a path towards bankruptcy? Because these numbers that you guys quote and the numbers that you read about, they just keep getting worse and worse. And now they're talking about, well, it could be 2 years till they're profitable. Can we guarantee that this company will be here in 2 years? Because here's the good news, and you just mentioned what might be the only good news is expectations and the stock price. You can see the ground from where this stock price is, right? At $6.50, it got down to $5.95 during this last sell-off. That you can see the ground. Their stock price is an option now. So, Landon, give us a reason why we think this company is still, viable even, or worth looking at in terms of trading.
Yeah. So, one of the cool things about math, or not cool if you want to look at it that way, is you can go down 20% every year forever. I mean, that's the thing, that you can always continue to lose that amount or any amount of percentage every day or every year. So even though they're 650 and they've got that going, you can always add more decimals to it. So I think it could be a long goodbye, but I also think that, this is a large company with a lot of assets. They've got, obviously, they've got a lot of stores experience. It's possible that they could turn around. They haven't shown anything to us that says that they can yet. I think that the whole lockdown was a huge opportunity for them, and they took a little bit of advantage of it. They got a lot. Like I said, the omni-channel was huge boom for them. The website did very well, but what the data that we're showing is that they've now lost all of those customers. They went somewhere else, either because they had out of stock issues or because of just general happiness or whatever it may be. Someone's executing better. It's tough to compete against Target and Walmart. And I can't think of too many things that you could go buy at Bed Bath & Beyond that you couldn't buy at Target or Walmart. So they had the opportunity, they took advantage of it for a little while, but then they completely lost that foothold. So that gives me a little bit of lack of confidence in this execution of this company. So maybe over the next 2 or 3 years, we'll look back and say, yeah, it was a bargain at $6. I think you're more likely to say it was a bargain at $3 or $4, because I think that price is more likely to come than 10 or 20. So right now, I'm not bullish on this company long term. I'm bearish on it long term. Short term, I don't think this is the quarter. But again, expectations are just so low. If they ever said, "Hey, we figured something out and we've got some good numbers here," you could really spark something because they have the assets in place to take advantage and leverage if they could find something. They just haven't found it yet, and they're 0 for 1 on opportunities. So hopefully they get another opportunity and they convert the next one.
And Landon, if you have an earnings score on this, it seems like a lot of your data is negative. What would it be?
Well, you know what's crazy is the way our earnings score works is it looks at the projected trend or the projected path of our data and compares what the actual data is compared to what you would have thought it would be. And so it's actually coming in at a positive 17, pretty close to neutral. But basically what we're saying is that we were headed straight down, and now we're starting to level off a little bit where our descent is slowing. So that could be seen as positive. So earnings score is basically saying the terrible expectations may be beaten, and that might be good for the stock. I don't think it's going to be significant this quarter. I would not be betting bullish on it. I'd keep my hands off of it at least for a while. Wait till they actually demonstrate competency at the executive level.
Yeah, I just moved and I just checked with the boss. Did not buy one thing from Bed Bath & Beyond over the last few months. So confirmed there, full disclosure. All right, Landon, great stuff, great information as always. Have a good day.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio.